Hello there, and it's me, Charles, again in this video tutorial. It's been an ongoing series, especially with regards to um, development projects or construction projects. So, in this one, we've been building modules related to a commercial building that is going to be built and will be leased out for rent. So if this is your first time seeing this video, you want to check on other videos in the playlist and then see what we have done so far. In this video, we actually will be working on the number 5 question, which is the profit and loss statement. So we'll be building that. We've done all of these ones and partially some of others. So let's just hop in and see how we solve this one. Now, because of time, I have just structured it so that we can see what it would come out to be. And there's nothing strange here. What I did was to recreate. So what I did was to make a copy of this working sheet and then bring it up this way and just make a copy of it and okay it. And it's going to give you something like the working sheet. But when you come, all you just need to do is take out everything from this construction period, take out everything down, just you're going to delete it, and then that will give you the opportunity to start the income statement and then structure it this way. All right. So another thing I just want to tell you is that for the periods, I have linked them to the working sheet. And that's the principle in financial modeling. If you entered the value in one sheet, you don't need to enter it somewhere again. All you just need to do is to link to where you have it before. So all of these are formulas here, but they are no longer formulas here, but links to the working sheet. So additional sheets that will be created will all link to the working sheet. So once there's a change in the working sheet, that change cascades into all other sheets and everything becomes uniform. All right. So for revenue, how do we get our revenue? Remember that we had already calculated things related to revenue. So we're going to come to that section. That section makes it easy. You can see the section lines makes it easy for us to just go straight and get exactly what we want. So this is rent revenue here. And so we'll just come here, pick it up, and then we're going to get it in here. What about that of parking? So what we do about parking, remember that we did some work revenue from parking, and it's a function of the capacity of the commercial building. So we're able to derive that revenue here, and so that is what it is here. We would have taken the total revenue from here, but we just want to show the parts that makes up the total revenue in our income statement. So I'm going to click on this, and I'm ready to have this one in there. So I'm just going to just run this all down, and there we have our revenues. And you already know why we don't have revenues here, because they are the construction period. Everything that allows that to work has been done in our working sheet when we were building the initial model, the construction period and the operation period. The flags that control them, you can see that they are already giving us benefits here. Now let's go to the operating cost. For operating cost, we're just going to look for each of these things and link to them. We have already worked them out here. So we'll be looking for the fixed expense. So here is the fixed expense. So we have here the actual fixed expense that is a function of the operating flag. So I'm just going to link to this, and then I'm going to just copy it down. But now if I copy this down, you notice that these are positive numbers, but expense should be negative numbers. So I'm going to just put a negative sign at the beginning, and by the time we copy it down, we'll be able to get it. So let's just finish all of this before we copy it down. So the variable cost, our variable total cost is going to come from here. So we have the variable expense here, and we have property fee that is here. So I'm going to just come here, click on this, you know, and we're going to just put a negative sign here. You get it? So that gives us that one. Property management fee. Let's go back. That's the property management fee there. So we're going to just take this with a minus sign there and hit it. And then the maintenance cost, we're going to find it from here. Maintenance cost is here. So that's maintenance cost. You get it here. All right. So we're going to take this again. We're going to put a minus sign there. So let's look at this very well. Maintenance cost. So we're going to link it here. So this is what it would have been if, we're in operations, but we actually want that which is influenced by the operation period. So that's why we'll come to this. That is it's in row 98. So what I will just do is come in here and just change this from row 93 to 98 like this, and then I now have all my values here, and I'm just going to just copy to my, right hand side, control arrow after selection copies it. So we now have this here. So your EBITDA, what the EBITDA is doing is actually saying that take your total revenue, subtract all of your operating cost from it, and then what you have will become your EBITDA. Now, why do we call it EBITDA? We call it EBITDA because if you look at it carefully, you will see that this actually means earnings before interest, taxes, and depreciation and amortization. So these are expense. So we have interest here, we have depreciation here, we have corporate tax. So all of that is not yet out of this, and so that's why we give it that term there. And so your calculations here would be able to get you exactly what it is. So you see, it takes the revenue, it takes out all the costs, direct or otherwise, that we need to get out of it, and it gives us this. So fortunately, we have our EBITDA positive here, and what you have here is the margin. So how do you calculate the margin? The margin is simply take your EBITDA and divide it by your revenue. So it's more or less finding the portion of EBITDA within total revenue. So that's what that one is doing. So by the time you chart it, you're going to see that EBITDA is definitely less than revenue, but it takes a portion of revenue. Um, and that's what we have here. So we have used this as the percentage that measures it. That's the margin, the EBITDA margin. And then if you see going forward, you would see that the EBITDA margin stays at there about 80 and 83 and so on like that. Okay. Then what about other expense? Recall that we had calculated depreciation in the working sheet. Somewhere down here, we had calculated it. And if you look at it very well, you would find out that this is a summation of all the elements of depreciation. So all the elements of depreciation has been taken and summed together to give us our total depreciation. So if you don't have this, you want to just calculate it and have it. That's your total depreciation here. So that simply means that I can bring in my depreciation equal to minus and just go to take my total depreciation. So, and we can copy this all through here. So you can see that we don't have anything in our construction period, but we definitely are going to have later. What about interest? So interest is an expense. So we're going to just do this, come to the workings and look for where we had calculated everything about funding, interest, and so on. Like, so this is what it is. So this is the interest for debt. So we have everything calculated, additional interest, interest pay down, and all of that. So it's going to link to this portion of it. You get it? So it's going to link here as our interest, and we're going to just take all of this and copy it down. Okay. So depreciation, we need so let's check out what depreciation is here. Okay, so we've already so let's see what it is here, and down here. All right, so depreciation is already a negative number here, so that simply means that over here we need not have a we need not have a minus sign there, and so I'm just going to copy it all through again and run it, so it should be an expense. So after that we have earnings before tax, and so that leaves us to take our corporate tax from here. Now, how do we get our corporate tax? Actually, if I click here, you'll see that I'm doing something with my earnings before tax. Okay, but I'm multiplying it with something from the input cell. Now let's go and find out what that is. I'm going to hit my control square bracket, my first square bracket. That's the button after the P in our keyboard. So once we do this, we are able to see that we are picking the corporate tax percentage, and then we are using it to multiply um, the uh, the earnings before tax. So that's the assumption we're using here, and then this can be copied all through to this point. Okay, so that takes us to PAT, which is profit after tax. So this becomes our profit after tax, and with this we have completed our income statement. Yes, it's that brief, but in some models the operating costs might be a little more than what we have here, not just jumbled into fixed and variable portion. But the interesting thing is that just as we have treated everything here, that is how you treat expense in any model that you are building. Okay, so this concludes the income statement requirements that we have in 5, that is here. So it completes that. And then in our next video, we'll be looking at things related to our cash flow. And we're coming close to our DCF so that we understand how we do it. And another interesting part would be the scenario analysis, where we'll see how we can use data tables to, see what our scenarios might be. So if you have found this video interesting, you want to like it, you want to subscribe so that you get notifications with regards to upcoming videos in this series. Thank you very much for watching, and I would see you in the next video.